you get a fantastic return. So how are you doing that?
Well, I think the main principle we start with is thinking about the fundamentals of the company. So is this a company that has a good quality management team that have a clear view of what they're trying to achieve? Have we got alignment of interest as shareholders with the management team? Are their incentives right? Do we understand what their motivations are? Does the company have a good market opportunity? So either does it, is there significant scope for it to grow with the resources that it has, or if it's an established business with a strong position in a niche market, do we believe the characteristics that are allowing it to be a market leader are sustainable over the life of our investment? So does the market kind of give them sufficient room to generate the returns that we're looking for? Then we look at the business model and the company's market position. Is it fundamentally profitable business model? Do they have a competitive advantage which we think is sustainable, and why is that? Why do their customers buy from them, and can they crisply articulate why that's going to continue to be the case, and how they're going to grow? We look basic things like the strategy of the company. Is it clear and simple? It's amazing how many companies that I've invested in over the years, and ones where we've made mistakes have been where the strategy is too complicated. They're trying to do too many things and they don't do all of them very effectively. So just trying to understand a simple, clear strategy, and also understand how that links with shareholder value creation. Do the management understand the connection between the business strategy and value creation strategy? And then we look for the financials. Are we happy the balance sheet's robust? We think about the quality of earnings. What's the visibility over the growth trajectory of the company? So we like recurring revenue models and businesses that have that are not really transactional in nature, and therefore you kind of have some underpin to them each year. And then lastly, we look at the valuation, and we think, based on the fundamental characteristics of the company and our view of the prospects, can we buy into this business at a sensible price which allows us to make a sensible return?